Henry, great to see you. Thank you for being with us.
Thanks for having me.
Henry, the Hong Kong Exchange recently announced it's launching an Asia and emerging markets futures and options contracts under a license deal with MSCI, with you. Why did you pick Hong Kong?
Well, we saw in Hong Kong was a combination of very strong factors that led us to this decision. One, a large customer base, including international investors, regional ones, and Chinese investors. Secondly, a very large and deep pool of liquidity. Thirdly, an ability to build an ecosystem, not only of exposures around the world, but also, very importantly, a greater China ecosystem, combining in futures contracts exposures to Taiwan, to Hong Kong, and to the various types of investments in China, such as China overseas investments versus China Asia investments, and also not only listed futures but also options, and then lastly and very importantly, the ability to develop structured products and over-the-counter derivatives by our clients of those listed options. As you know, Hong Kong is the largest, if not one of the largest, structured product markets in the world.
But this is a very interesting time for Hong Kong, and there are many within the financial community who are concerned about what China's national security law means for the future of Hong Kong. The protests, we are still continuing to see some of them in this city. How concerned are you about the future of Hong Kong?
Well, I've been going to Hong Kong and China and the rest of Asia for over 40 years. So I have heard this story before, many times, as to the demise and the relevance of Hong Kong one way or another. And it hasn't happened. Every time Hong Kong comes back stronger, more resilient, reinvents itself. I believe strongly in the future of Hong Kong as a financial center, international financial center. And in our case, clearly we're looking to see Hong Kong as a major international risk management center. A lot of it is not only because the rest of the world will need Hong Kong to access China, regardless of geopolitical tensions. China's will continue to be a large economy, a very large financial markets in China, and therefore international investors will want to be in China, and Hong Kong is one of the gateways, if not the gateway, to do that. China would also need Hong Kong because they will need a place where there is more advancement currently of trading, of laws and systems and regulations. So both parties will need Hong Kong one way or another, regardless of all the other tensions.
You believe in the future of Hong Kong, but we've been polling our audience here in Asia, and there are more people who believe that Hong Kong's loss will be Singapore's gain, as in Singapore is going to become sort of the next financial destination in Asia. And you recently walked away, or you're walking away from a 23-year partnership with the Singapore Exchange. Why did you decide to walk away from Singapore Exchange, or could you have continued that partnership while also pursuing a partnership with Hong Kong Exchange, or was it exclusive?
No, we don't do exclusives with any of our partners. We always believe that we need to earn, and our partner needs to earn the business day in and day out. But we also believe in very strong relationships, and we do not like pitting one party against another. So it had to be, in our case, with this licensing, either Hong Kong or Singapore. Hong Kong is a very fine and great financial center and will continue to prosper, for sure, in years and decades to come. What we saw in Hong Kong was those attributes that I mentioned before, and especially as China becomes a bigger factor in the international financial system, Hong Kong, of course, being closer to China, or being part of China in the one country, two systems method, we wanted to be there.
Based on the MOU signed last year, when can we expect the China Asia's futures launch in Hong Kong?
Well, we're all waiting for that approval, hopefully at some point in the future. I think that the conditions are getting better, to be able to get that approval from mainland China. We believe that China now has a very strong interest in supporting and encouraging the development of Hong Kong as an international financial and investment center. And that could potentially be a good window for us to be able to launch that contract.
Any indication of timeline?
Not at all. We don't have any direct indication yet, but clearly our conversations seems to be encouraging. So we're cautiously optimistic, but obviously it's not over until we actually are able to see the launch by Hong Kong exchanges on this great contract. We do tell you that the number of clients that are being asking for this is increasing dramatically. And now with the consultations and the conversations that we have had with clients around the world regarding this new license to the 37 futures contracts in Hong Kong, the level of interest has spiked dramatically in the possibility of A-share futures contract on MSCI in Hong Kong.
I want to turn attention now to ESG, and you're obviously very passionate about that. As we all settle into a new normal as a result of the pandemic, are you seeing any new trends in ESG investing?
For sure. I think what has happened since the pandemic started is we have witnessed significant outperformance of ESG portfolios relative to any other kind of portfolio in the world. I think that investors have begun to see and identify that the best governed companies, the ones that are protecting the environment, and especially the ones that are very conscious of their social issues and their human capital issues, have outperformed in this during this period. So this is the area of MSCI that is the fastest growing, and it was before the pandemic, and it has accelerated since the start of the pandemic. So we're very, very optimistic and encouraged to see that. And we hear that from all of our clients. The dialogue with many CEOs and chief investment officers that I have among our client base, this is a topic de rigueur. In every meeting, there is a lot of discussion about this. Sometimes the whole meeting is all about ESG investing.
Is this it, Henry, the pivotal moment in modern history that will finally make ESG, a priority for investors? Like you said, it's been growing, but it's still partly considered a bit of a niche portfolio. But is this it that will make it really important?
I would think so. I think it's gradually getting into the mainstream of investing. And obviously, we have been a catalyst for that, around the world. Our objective from day one has always been to make sustainable investing and ESG investing part of the mainstream of the global investment industry. I think when you look at just two examples in the last clearly 3-4 months, the global pandemic, we can talk about a virus, infecting us and creating so much loss of death and anxiety and uncertainty, and clearly all the economic consequences. I think what we ought to ask ourselves is, where are these pandemics coming from? How do they originate? And a lot of it is because, maybe not this one itself, but many other ones, they're originating from our disregard for the environment, our disregard for the planet, and therefore the change of habitats of animals. Those animals need to flee, need to get closer to domesticated animals, like pigs and animals like that. And those animals then infect human beings, and those human beings travel much more now than they did before and infect others. So that's something that is going to propel ESG. And obviously, the second one is the social issues that we are seeing all over the world, but especially in the US. those are going to put a huge emphasis on the social aspect of sustainable investing.
I'm glad you brought that up. I was just going to come to it. The social issues, what we are seeing in the US, with the Black Lives Matter movement. Do you think that will influence ESG investing? Are investors going to care more about how a company, how committed a company is to racial equality, for example? Will they care about that, and will that influence ESG investing, and how so?
I've been predicting that, especially in America, the bigger part of investing will turn out to be the social aspect. The bigger part of sustainable investing will be the social aspect, for a few reasons. One, clearly the issues of governance are very well advanced, and people know them, and you know what you need to do to make sure the company is very, very well governed. The environment is also very direct, very understandable. People know that, and now it's a question of whether they do something about it or not. And the social issues are a little harder because they're not one thing. It's a variety of different factors, and the measurement has to be appropriate. But I've been predicting that, and if you think about the last few months and the last few years, just think about the three big issues that have come out in the social norms. One is the Me Too movement in terms of equality of opportunities, equal pay, and the encouragement and employment of women in the labor markets, especially in senior ranks. That has been happening with us in America for a number of years now, and that continues unabated. That's a social issue. The pandemic has demonstrated and will differentiate companies between the ones that care about their employees in terms of their health, their safety, their well-being in their work environment, and the ones that don't. There will be some companies that are forcing employees to go back to work maybe prematurely, not wearing masks, not creating social distancing, and employees are hesitantly following them, and that's going to make a big difference. And for sure, these issues of incredible racial injustice and discrimination. It's hard to believe that in the first half of the 21st century, 155 years after the abolition of slavery, we're still dealing with intractable issues like that in this country. So I think that that's going to therefore present another significant waves, and it's already happening. Whether it's in educational institutions in America, there is a big awareness and consciousness. There are a lot of movements in corporate America, a lot of movements as well. And the last point that I will mention is that this is not just about a problem in the United States. You see this in the UK, you see that in France with the Northern Africans, you see that even in India, you see that in Brazil, with a lot of the Black population there. You see it all over the world.
Yeah,
it's time to start to change. Yeah.
Yeah, absolutely. But one issue that always comes up when you talk about ESG is the issue of compliance. How do you know a company is actually doing what it says it's doing, whether it's greening their supply chains, whether it's paying men and women equally, especially at MSCI? How do you verify that?
Well, we at MSCI spend a huge amount of time gathering hundreds of data sources, thousands and thousands, sometimes millions of data points, and in order to come up with our ratings. Half of the data that goes into the creation of our rating is company disclosed data, whether it's filings with the securities commissions or filings with other government agencies or websites or the like, or their own disclosure. The other half, and a very integral part of our ratings, it comes from third-party sources, whether it's courts of law, environmental agencies, blogs, and things like that, in order to then determine a complete picture. Clearly, there is a lot more disclosure that is needed. But it is, in a court of law, when there is a filing about a discrimination about women, for example, in terms of pay, you can capture that as to whether the company is having equal pay for women and men or not. And then we need to investigate that through other sources of data as well. But that is one indication, for example, of that particular topic.
Where do you draw the line? Are there certain companies or certain industries that are completely off limits for you? And what's the criteria you use to determine which ones are completely off limits?
There is no country, no region, no sector, no type of issuer, whether bond or equity or private equity or real estate or the like or private credit, that would be off limits to our ability at MSCI to create ratings of those entities. We are very independent as an organization. This is an area that requires a huge amount of independence, but it also requires a scientific methodology, a very rules-based methodology, not an arbitrary one. And that's what we do. We adhere to these principles. And right now, we rate 15,000 issuers, both equity and bonds, and counting. We have plans to go into real estate, particularly for the environment, and private equities and private credit. We create 1,500 ESG fixed income and equity indices. So this is a big area that we are extremely focused on because it's good for the world. It's good for capitalism. It's good for the free enterprise system. It's very good for the better allocation of capital in the world.
You went ahead with your semi-annual index review in May this year, while a lot of your competitors decided to wait, just given the volatility we've seen in the markets. How did you decide, how did COVID influence you to decide, which ones to keep in and which ones to move out of your index?
Well, I think COVID separated those exchanges from the ones that were continuing to functioning appropriately, and a few of them, a handful of them, that shut down, mostly because they were in-person exchanges, in-person trading, and therefore they didn't want a proximity of people to one another. But a lot of other exchanges already had a great deal of electronic trading, in their systems that they could continue. Most of the exchanges in the world, there was huge amount of resiliency in the technology and in the trading that took place, even in extremely volatile days, of the market. So we felt, and our strong bias was that regardless of market conditions, we should rebalance the indices. Our clients expect us to do that. Now, clearly, we had to take this all the way to the day of the announcement and the day of the actual implementation, because in the highly unlikely event that there will be extremely tumultuous conditions in which price discovery will be challenged significantly, we would have to pause. But other than that, we feel an obligation to maintain these indices in good markets and bad markets.
And lastly, Henry, I want to talk to you about your emerging markets index. And here in Asia, there's a lot of curiosity about Vietnam. And people want to know, why isn't Vietnam on it? What's holding you back from including Vietnam on it, in it, given that Vietnam is continuing to grow in importance, especially amidst the US-China trade tensions? So why not Vietnam? When could we see Vietnam in it?
Yeah, first of all, we have always a strong interest in including more countries into our indices than not. It's one simple reason. More choice, more diversification will benefit our clients around the world. If there is one free lunch in global investing, it's diversification. The more choice you have, the better risk-adjusted returns. So we monitor a lot of countries very closely, including Vietnam. We have our sights on them to see how much progress they can make. Our team is in discussions with them. There's a number of things that need to happen. Obviously, that we're working and talking to them. We're talking to our global investor clients as well. We would love to see them, make those changes in order for them to be part of the MSCI indices and therefore part of the family of investable investing, according to MSCI and our clients.
So when you decide to include them, please come back and tell us first.
Well, we have to tell everyone at the same time, but I'm sure you're going to see it well in advance, because we always put the country in review before we make any actions, right?
Thank you so much for your time, Henry Fernandez, Chairman and CEO of MSCI. It's been a pleasure to speak with you. Thank you.
Thank you.